Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm here with Manu Choudhary. He's the CEO of DMA Link and the co-founder of DeFinity. Hi, Manu. How are you this week?
Hey, Paul. Yeah, not too bad. How are you doing?
I'm good, thank you. It's the run-up to Christmas. The market's a little bit nervous, a little bit thinner than usual. What's going on from your perspective?
So, interestingly, Transport for London have decided to have a tube strike on the busiest weekend before Christmas, which is not really relevant for the markets, just for me slightly frustrated with what these idiots are doing. Anyway, but in terms of the markets, yeah, look, interesting week. Certainly, one of the biggest pieces of news was the fact that IBM and HSBC, in conjunction with R3's Corda blockchain, conducted the first CBDC transaction cross-chain, which is really interesting. But they've been so vague with the details that it's incredible. They've been incredibly vague. So it's good news, and you know it pleases me no end that HSBC, who have been probably one of the most anti-digital asset banks ever, are diving into the CBDC scene with such enthusiasm and such zeal. I suspect the reason maybe they haven't publicized the transaction more is maybe because the transaction didn't quite do what they were expecting it to do. And what's interesting is one of their claims is they basically wanted to use this infrastructure to settle FX. Now, funny enough, as it happens, I know quite a lot about FX settlement, having spent most of my career working in FX. But one thing I can guarantee them is the solution they're trying to find is going to be far more expensive than they think. Clearing, absolutely. But of course, R3's Corda is not a real-time system, so you can't do real-time clearing. It's end of day. So how is it different to Swift? So these are things that I would ask as someone who's looking at this as an outsider. You know, what is the incremental value they're building with this? And whilst I think it's very positive they've done this, whilst I think it's actually quite a big deal, what is the outcome of this? What is the actual incremental gain to either the market or the technology? And by not telling anyone what they've done, it's very difficult to get either of those.
Right. So you're saying cross-chain. So for people who are not as familiar with the technology as clearly you are, can you explain what the actual transaction was?
Well, this is the thing. They didn't really say. So essentially, the term cross-chain basically means going across more than one blockchain. So, for instance, if you send Ethereum to Binance Smart Chain, for instance, via bridge, that would be a cross-chain transaction. So that's what they've done. They've obviously used several blockchains, and they've basically done a transaction of a CBDC, which again they haven't disclosed which one this is. But from what the press releases have been saying, it seems like it was very positive. Again, I don't know. If I could get a bit more info, if I could query the blockchain, for instance, I'd have a little bit more comfort that the deal was actually done.
Yeah, but to be fair, it's like is that not a bit like making the first mobile phone call and on a network? They're just testing it out, and clearly it's so early days that they don't want to really reveal too much about it. And even if it didn't work very well, that's at least it's a first step.
Well, yeah, absolutely. I think it probably is a little bit like that, but I guess with technology like this, it's I mean, look, don't get me wrong, I'm a big fan of blockchain, and I have been for many years. But the reality is that not every solution is helped. There's a whole bunch of issues with blockchain, mainly because of the speed. It's just not fast enough for a lot of things, particularly, for instance, if you're building trading platforms.
Yeah.
But it is very useful for post-trade, which is kind of where they're using this. So look, I think there's decent value. I guess maybe I'm just frustrated because I'm keen to find out more, and I'm hungry to find out a little bit more about how they've done this and what they actually used. And it's just frustrating they've just been so vague. I mean, maybe they'll do a white paper next year. Who knows? But if they do, it'll be very, very interesting to watch.
Yes. So was there any other news that caught your eye, Manu?
Well, yeah, the other thing that was interesting was CoinMarketCap, I believe, got hacked because I had about a dozen people send me messages saying, "Oh, wow, look, I'm a billionaire. Look at my balance on Exodus." It's like, yeah, I suspect there's a problem with the data feed here. Something's happened somewhere.
Oh, wow.
So apparently there was an issue with one of the oracles they were using, and they fixed it now, which is good. So unfortunately, all those people that thought they were billionaires, I'm hoping they didn't spend too much money buying themselves Lambos because it was just a bit of a glitch.
If it sounds too good to be true, it's too good to be true.
It is definitely too good to be true. And then just I guess just more on the market side of things, in terms of interest rate decisions, I find it quite interesting that for the last 10 days, the Bank of England have been talking about the moronic variants of this pandemic, and how they would likely be more lockdowns and economic shutdowns. And then what do they do on Wednesday? They hike interest rates by 15 basis points. I mean, not that anyone cares, but it's just a very stupid thing to do. And this reminds me of exactly what they did back in 2008, where they hiked interest rates twice.
Yes.
Before they had to cut them.
Yes. Remember,
by 400 basis points. And I was looking at this, go, why are these morons doing this? This doesn't make any sense.
Well, it's the energy prices element of inflation that they don't get. That element causes inflation. So that puts more pressure on everybody, from businesses to individuals. But it looks like there's more inflation in the system, which, to be fair, there may be. But then if you hike interest rates, everyone gets hit with a double whammy. I think the system was very over-levered at that point, and there was, a lot of evidence of too much debt in the system. Well, at least they fixed that by now, eh?
Yeah, they did. They just transferred it from bank balance sheets to government balance sheets. That's genius. But it's twice as big now. And then the other thing was quite interesting was the response to Jerome Powell's statement yesterday, which is it was very bizarre. He's going to be more aggressive with tapering, i.e. they're going to reduce the number of bonds they buy every month, down from 120 billion at the moment. They're going to basically decrease that over the next couple of months. I can pretty much guarantee they're not going to decrease it come the new year. I think they're going to make a bit of a U-turn. But the markets, for some weird reason, equities rallied, Bitcoin rallied. Obviously, they've both now come off a little bit, maybe 1% or so. But it was a very odd move. I don't know what the hell people were expecting, but I was a little bit surprised that that's actually how Jerome Powell went forward, because I know he's going to have to undo this very quickly.
Yeah, I suspect the market knows that too. So, I mean, it could go one of two ways, in my view. Either inflation is going to get out of control in 2022, in which case the market is going to start selling bonds because this isn't going to be enough, or, as you say, there may be too many pressures from the government missteps in terms of handling the economy and raising, certainly in the UK, interest rates too soon, that they will then have to unwind. So the question is, will we see a deflationary period before an inflationary period? And it's a very good question. But we can have a look at the long bond and see how that's reacting to it. At the moment, it's relatively muted, but those are very good questions.
Look, I guess anything I say is arguably, are we not already at that point in terms of inflation? I mean, look, I look at US CPI, which is at all-time highs. I look at UK CPI, which seems suspiciously low to me, if I'm being honest with you. And if you go to shadowstats.com, which I'm a big fan of, they use the methodology from, I think, the Reagan administration era of calculating inflation. And that number is more like 17% in the United States. I'll be willing to say in the UK, it's probably at least 10. But I haven't done the analysis myself. But these are, for developed nations, these are insane levels of inflation. They should never be this high.
So given that, then, inflation is high, so therefore interest rates should be going up, and they shouldn't be reversed into next year. The fact that Jerome Powell's saying he's got to put up interest rates is they should go up and they should stick.
They should go up in basically during a normal cycle. We're not in a normal cycle. We've been in this slightly insane cycle ever since the 2008 crash, which is we had an economic boom that was 100% unsound, and now we're seeing some of that being unwound, basically. But the problem is that unless they begin to be more aggressive and have more monetary easing rather than tightening, then this is going to end up causing issues in the system. I mean, look at what happened back in September of 2019. The entire repo market essentially froze, and the prices spiked from 1 3/4 to just over 10%.
Yeah,
because no one wanted to basically get involved in the repo market. And so what happened? The Fed came in, they panicked. Thankfully, they had a pandemic for next year, which is really useful. But then they were able to inflate their balance sheet by 25%. This reaction has got to continue. They have to keep doing this, otherwise the system falls over. So they will have to do something. And look, it may not be in January, it may not be in February, but at some point they have to continue doing this, and they have to print more money if they want the system to survive. Otherwise, it will freeze.
Yes, absolutely. They're definitely on the treadmill, and it's going faster, and they can't jump off. That's for sure.
No.
So was there any other news? I mean, those are big items, but anything else caught your eye?
That was kind of it, really.
Okay, great. Well, let's have a look at the charts and see what is going on, which is pretty interesting given, as you say, we're in this as we say, we're in this Christmas period. First of all, looking at the equity markets, what's going on with the S&P could still be in this reversal pattern. We're in a consolidation right now. The market's not very far from its all-time high, and that's a short-term consolidation that could easily go back down again, create a top. It's in a neutral position for me. I mean, I quite like the ascending nature of this. It feels like it's going to try and pop into a new high, but I'm going to reserve judgment just because there are some other indications at the moment. The VIX index, for example, which is still elevated. If that remains elevated, I think we'll see a bit of a correction in the equity markets. But it's a mixed signal, so I'm not going to look too much at that until the position clears. And for the moment, I'm going to stick with a sideways range. Now, the big news is something I've been talking about for a very long time, and that is the state of the Hong Kong market. Now, the Hong Kong and Chinese stock markets have both been underperforming, but the Hong Kong market is very near its a key. Well, the low for the year has just been hit. It's sitting on a massive low from last year, and if it breaks this, which it looks like it's going to do, it's going to collapse like another 1,000 points with no problems at all. So what is going on over there, I just do not know, but that's not looking good at all. Deflationary spiral is it seems to be happening now. Against that, we had the Chinese stock market, which actually managed to break a downward trend, which was really surprising because it was underperforming. And then I think Evergrande announced that they weren't going to, well, they defaulted on their bonds. So that's not particularly good news. And the market had been focusing on that. But rather than the market going down, it just went straight up. So I wonder, I'm not going to point any fingers, but I wonder whether it was slightly manipulated to the upside to cover that news, and now it's coming back to reality. But either way, it has been moving up since September, so this is a short-term upward trend, but the dominant primary trend is still to the downside. So I talked about this in the weekly, how we saw it move up here, and that was, in normal circumstances, that would have been a really great buy signal and a breakout, but I just didn't trust it because of what was going on in the Hong Kong market and the overall position of the trend. So we rejected that move, and the Hong Kong market moving down is very significant. So we're going to find out soon what that's all about. But looking at the where's the Taiwanese market, which I've put in a few times, and we talked about the geopolitical risk that may be there a couple of sessions ago, but the overall trend here is still pushing to the upside. This is a massive triangular constriction, and it should really resolve to a sharp move to the upside. Now, of course, nothing is guaranteed, but it keeps knocking on this resistance all the way up at 712. So if it can take that out, and this is a really nice little triangular constriction within a larger triangular constriction. So you've got a fractal base of the larger chart, which both point to a breakout to the upside, which is looking interesting. So again, it's like, what is going on in that region? We've got so many different signals, and they're not normally as diametrically opposed as we're seeing now. The global markets, to a certain extent, have become very synchronized, and this is out of the ordinary. Now, looking at the yields, let's just drop down and have a look at the yields. So this is the US 10-year government bond yields, which have been in a consolidation. We had the 170 level, 1.7%, which resisted twice, and we were looking for a breakthrough to then take us to the 1.77% level. And if it took that out, we would see a decent bump in yields. Now, we had a nice trend line that was holding, and that broke, and I've redrawn the trend line, but it's a tentative move because it's only got 2 points to it, and the trend angle is very similar. So I think for the moment, this is in a consolidation. For choice, I think it will go higher, and we will see a break of this 170 at some point. But if it closes below 130, 1.30%, I think all bets are off. But the path, I feel, for the moment is that bonds will be sold into for whatever reason, whether it's interest rate rises or tapering or inflationary expectations. That looks like rates will go up, but it's balanced. I mean, it's not absolutely clear because we're not trending yet, but we're just looking for the signals that indicate it's really going to start to move. Now, talking of moving, the US dollar, as you know, we've been bullish for some time, bearish on euro dollar, bullish on the dollar index. And we've been tracking this little symmetrical triangle, which is usually a really nice short-term pattern that would see a sharp break to the upside. So we got the rates are going up news. Now, my analysis of technicals with the fundamentals is usually somebody knows that something's going to happen, so they start buying ahead, and this is the news that we don't know about. So the market gets bought up because there's a kind of rumor or whatever gets out that rates are going to potentially be going up. Then we get the consolidation, then we get the news, so buy the rumor, and then the fact comes out, yes, everybody knows that rates are going to be potentially going up. So what does the market do? It spikes up on the day and then it crashes back down again. So that's par for the course. But I think overall, the market does need to settle back into its overall trend. And that overall trend is still bullish. So even if it does have a slightly larger retracement, it's broken this support line now, it might come back to this one. But the target for this is at 97.12. So I still think it's going to go up. So it's 97.20, which is this Fibonacci retracement level. So it was due a consolidation, but the overall trend in the dollar is still up. So we're still working on the basis that it will remain strong, even though it's having a little consolidation here as people digest the news that's coming out and whether they really believe rates are going up or not. As Manu was saying, that's absolutely valid for the market to be questioning it. Now, getting over to the cryptocurrency markets, let's have a look at those. So we talked about the weakness in the crypto markets, and this is Bitcoin, and we use this yellow line as a buy trigger, which is still remained untouched, and a break of 54,000, which was a watershed level. If it breaks below as it did, we had this aggressive move, and it's staying below. Now, I think, unfortunately, whichever way you look at it, the risk still seems to be to the downside. We might get a short-term rally, even if it breaks this line here. If it breaks it while it's below the 54,000 level, I'd be slightly skeptical, because we are going to go into a consolidation before we see the main bullish trend. So I think it's important to say that we are seeing a retracement, but I don't think the bigger picture has changed. I do think everything is still bullish from a primary trend point of view. It's just that this intermediate trend could last between, a month, maybe a bit longer. I mean, hopefully it'll just be a few weeks and then off we go. But I think we need to settle down for what could potentially be quite range-bound price action before the market resumes its trend. So if we look at Ethereum, this is, as we speak, forming what I think will be a topping pattern. So this 3,573 level is looking like it's going to break for me. Possibly by the time this goes out, but I'm not sure, depending on the timing. But this is an extremely important level. But we are seeing rallies getting a bit weaker on each bounce, so I'd be prepared for a move towards the 3,323 level, which is the next important support. At the outside, we could be looking at a move down to 3,000. But I think we'll take this one step at a time. Now, again, this is not all completely bearish from a long-term perspective. We will start to look at some buy levels. The 200-day moving average is still up. The 63-day moving average is still up and showing absolutely no signs of this correction. So from a broader perspective, the trend is still bullish. If we move back, take a 1,000-foot view looking down, you can see that the trend is still bullish. And this is, even if it came down to what we were considering the outside levels, it's still within this broader upward trend. So depending on the way you look at it, if you're not involved in crypto, there could be some great buying opportunities coming up. So Cardano has been a weaker market. We've given it a few opportunities to rally. It still seems to be looking quite heavy. So I was hoping that it would hold this trend line. It's broken it, but it's holding really good support here, just around 1.2. So there's lots of buying against 1.2, so I was thinking, well, if it can hold that, that's pretty good, but it's getting a little bit too close to it for my liking. So I think this is now going to actually have a go at the downside again, and it could be swept lower by the broader market. But longer term, I still feel that this is a positive trend, and we will see some good support I'd like to see a nice sharp reaction to the downside and see that rejected, because that's usually a great sign that the market's turning. We haven't seen that big shakeout yet, or even though we did get a bit of news that was bearish, it hasn't quite done it yet. Solana, may as well have a quick look at Solana. That broke the trend line, was also looking bearish last week. We talked about how it was sitting on this level, which is what it broke at 175, and it's come back to the trend line. Now, the reason why I like to leave in trend lines is because when they come back up as resistance, when they're broken, when they come back, they can act as resistance. So as you can see, this is happening here in Solana. It's come back over the sell trigger, but the resistance line is still in effect. So for me, it needs to do a bit more work before I can turn broadly bullish. I'm not going to get caught up in the short-term waves, because I think it will be a consolidation. The market is going to be thinner, and so we have to be a bit more careful about reading too much into short-term price action. But the big picture remains the same. It's bullish. We're just seeing a correction, and once it's punched itself out, we will be looking at this primary wave, and there will be a very good upward trend to be had into next year. So MATIC, just to give a quick update on that, because that was my favored cryptocurrency. There will still be ones that trade outside of the norm. You know, the altcoins can basically trade up and everything else go down. It broke its resistance and didn't follow through, which was a bit of a disappointment, but it's still maintaining its short-term range. So I still feel that this is more positive than the other markets. And whilst it didn't extend its rally, and that was a little bit of a disappointment, I think it will consolidate and then break higher. So it's just delayed the breakout, and it's looking a little bit more bullish than everything else. So for choice, I'm watching this as a breakout setup, whereas everything else, I'm pretty much convinced that we're going to see bigger retracements before it goes back up again. Now, of course, if it breaks and closes below this support line, it would change the dynamics of the chart, and I wouldn't particularly like that. But it's holding up, and relative to the majors, it's holding up really well. So that's why I like it. So it seems to be, Manu, that we're going to be in for a consolidation for a little while, but there's always market opportunities. There could be some really good short-term market opportunities, given that we're going to be swinging around in some big ranges. But I think you mentioned it last week, the big rally seems to be put back until potentially next year, and it may have to be on the when the US dollar starts to weaken.
Yeah, I agree with you. I think that's probably what's going to happen, I think.
Yeah. So any final thoughts before we wish everybody a Merry Christmas?
No, that was it, really.
Okay, fantastic. Well, look, thanks so much for watching. And if you have any comments or anything that you'd like us to look at, please drop it in the comments and we'll look at it next time. Just to wish you a very Merry Christmas and a prosperous 2022.